Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Impala Platinum sheds light on key issues in the PGM market. A sovereign wealth fund could quell nationalisation talk, and a Transnet rail split would be disastrous and is not on the cards. Impala Platinum's strong financial performance for the period ending June 30 reflects a recovery in markets, says Group Executive for Marketing Derek Engelbrecht.
There's certainly been a recovery in the market. After the economic recession and financial crash of 2008, 2009, markets started improving really in the middle of 2009 and right throughout 2010. So we saw prices were up, volumes were certainly improved. You'll notice we moved quite a bit more platinum this year. We had built a little bit of inventory at the end of 2009. So the markets were pretty reasonable in this period.
Coal of Africa chairperson and mining entrepreneur Richard Linnell says the discussions around nationalisation create uncertainty, which is not good for investments.
I think that one of the best ways we could look at this is the concept of a sovereign wealth fund. It's worked in Norway, it's worked in Singapore, and I think that we can look at this sort of stuff for South Africa. In that the sovereign wealth fund would invest in these projects up to the 25 or 26% or more if they chose to. And the benefits from that investment would then flow from the fund to the people who don't have mineral rights in their territories. So what I would suggest is that instead of having this 26% BEE, that the sovereign wealth fund in fact is the participant. The mines look after the local communities with their social and labour plans, and that again is another rent on the revenues, and that the sovereign wealth fund takes that benefit and spreads it around the country.
State-owned freight logistics group Transnet CEO Brian Molefe says it would be disastrous to split the group's rail unit into separate infrastructure and operational entities and to house the infrastructure assets in a new rail infrastructure utility.
Over the last 5 years, we have spent 85 billion investing in both maintenance and additions of new capacity. Over the next 5 years, we'll spend a further 110 billion. And I think that at this point it is inappropriate to be talking about vertical separation, partly because the investment spending is being financed by bond holders, both domestic and international. And so to give them the impression that government is about to split up Transnet and take away Transnet's assets needs to be challenged, because if it is indeed so, it will create alarm in the bond markets with respect to Transnet bonds. So the timing is inappropriate. The comments, I think, were insensitive to where we find ourselves with respect to the financing of the infrastructure relating to Transnet. Having said that, it is a matter that needs to be debated in an open environment, without anybody threatening anyone with war.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.